Hello and welcome to Business Today Television. I am Siddharth Zarabi and you're watching this special edition of Market Masters on Market Today. With me here is my colleague Sakshi Batra. On the show today, we have one of the biggest legends in the stock market, noted investor Dr. Mark Mobius, the chairman of the Mobius Emerging Opportunities Fund. He's also called the Indiana Jones of emerging market investing. Welcome, Mark, to the show. Thank you very much for your time with us today. Let me begin by first asking you about your recent visit to India. You almost spent a month here, and ever since your views on India are being followed by all markets participants very, very keenly. What did you notice during this visit to India?
Well, before I arrived in India, of course, I was very positive because I felt that the Indian market was going to do very well. And I felt that way for the last few years. But then when I visited, all of my beliefs were confirmed because as I traveled around the country, I saw the incredible growth taking place, the enthusiasm of the people, and the general atmosphere is one of optimism and growth. So, I love this term, Viksit Bharat, because I think that says a lot about where India is heading.
Mark, you said, and I am reading a tweet of yours, which is on the 21st of February. You said, I am more convinced than ever that India is set to be a leading global growth driver in the coming years. Despite all my optimism, though, I do see some potential short-term risks, such as an overheating stock market and possible changes in government policies. Let me take the first point about potential short-term risks and the overheating stock market. What are your views now, a few months down the line?
Well, there's no question that when a market is going up as fast and as long as the Indian market has done, there will be corrections along the way. So people have to realize that it doesn't mean that the growth story is over, but it means that they have to prepare for downturns here and there, and probably these downturns would be opportunities to buy. So the markets don't go up forever. There's always going to be corrections along the way, but I believe that from a long-term perspective, of course, India is the place to be.
Warm welcome to you, Mr. Mobius. Thank you so much for sparing the time for this wonderful discussion. Everybody in India excited to hear what you really think of the elections that are also going around and what could be its outcome. Now, why I ask you this is because the first two phases are done and dusted and they had lower voter turnout as well. Is there a risk to political continuity that you have been thinking that probably could be the result of these elections?
I don't think there's any risk to change in the administration. In fact, Modi will probably get stronger coming out of this election. I think probably a low voter turnout is caused by the belief by many people that Modi is going to come in again and there's no use to vote. A lot of people are supporting, a lot of his supporters feel, well, doesn't make sense to vote. But I believe that at the end of the day, his slogan of Viksit Bharat says a lot about what he's planning for the future and what's going to happen in India going forward.
Right. Mr. Mobius, another thing that I wanted to understand, if Prime Minister Modi wins a third term, what would it really mean for the Indian markets and the economy over the next 5 years?
It would be very positive because he has a clear vision for India. He has a clear vision for modernization. You must remember, at the end of the day, the strength of Modi and his policies have been centered on technology and the introduction of technology to the people at wide range. In other words, throughout all the people, throughout the society, the impetus towards digitization, towards improvement of the lives of the people throughout this country. And that is going to really drive this incredible growth and continuing to drive the growth going forward.
Mark, while your bullishness on India and the key points that you have sort of expanded on are absolutely spot on, one of the other concerns that seem to be prevalent is the India versus China question. Tesla recently was supposed to have visited, Elon Musk was supposed to have visited India. There was, a red carpet that was being prepared to welcome him. He missed India, but he's gone to China. And that leads me to a question about whether you think that India still has a lot of work to do, and despite the optimistic outlook, uh, companies, investors, institutional investors, and even foreign direct investment still focuses on China versus India.
The most important thing for India now is to reduce the bureaucracy involved in putting money into the country. I think this is a big, big barrier for many investors, not only equity investors, but also direct investors. There's a lot of bureaucracy, there's a lot of barriers to entry and exit, by the way, because at the end of the day, when someone puts money into the country, you've got to give them a path to exit as well. So I think this is something that Modi has to work on. Of course, he's got a lot of barriers because you have all these individual states in India that have their own barriers. So he's got to work on that. And I think he's setting some good examples in his home state. But at the end of the day, this is the biggest challenge facing India today. Now, of course, as you know, many of the manufacturers in China are moving to India because they have to diversify their supply chain. They realize that it's very risky to be so dependent upon China. So they definitely want to be in India, but there are lots of barriers for them to do that. I would not count out China entirely. China's continuing to be strong, a very strong manufacturer. But at the end of the day, China will have to take over some of the manufacturing from China. And both countries will probably continue to do well, but I think India will do better, particularly in taking over some of this manufacturing, if, and that's a big if the bureaucracy is overcome.
Mark, is that what is perhaps the reason that despite a pretty generous incentive scheme that has been announced for semiconductor manufacturers, we haven't still seen a major semiconductor investment in India? Now the government of India wants to tweak that scheme. We'll have to wait for the results of the elections. But is that also one of the reasons that we haven't seen too much success as far as the semiconductor plan in India is concerned?
I think many of these manufacturers who are thinking about India are waiting for the election results. That's number one. So after the election, you'll see them moving. But you must remember that you're talking about a billion, not millions, but billion of dollar investment. Such investments require a lot of time, a lot of planning. But there's no question that India will become a major semiconductor manufacturing center in the future. The speed at which this takes place will depend, again, on the bureaucratic hurdles that companies have going forward. But at the end of the day, India will definitely be a big manufacturer, not only of semiconductors, but all kinds of other electronics hardware going forward.
Mr. Mobius, we also are in the practice of taking viewer questions on the show with our top guests who come on this show. We have some interesting questions we have picked out from our viewers. One of the questions that's come from New Delhi, from Brijesh Singhal, he wants to know from you, which are the three broad themes that you would bet big on India over the next 5 to 10 years?
One of them would be hardware manufacturing. In other words, electronics hardware would be one area that I would focus on. Second area I would focus on would be software. As you know, India already is a big exporter of software, but I believe going forward it will continue to be very strong in that area, particularly in semiconductor software. And the third area would be, believe it or not, heavy industry, because at the end of the day, companies like Tata Steel and others supplying the framework for infrastructure will be quite strong going forward.
Okay. One more question I'll take from our viewers, and this is again from New Delhi. Sumit Seth wants to know from you, sir, how do you read the impact of the recent geopolitical tensions on global markets? Is it priced in, or any further risk could tumble the markets world over?
There'll continue to be geopolitical risks. This is true at any stage of the market. If you look to history, you'll see that there are always geopolitical risks. The good news for India is that they're pretty isolated from these risks. If you look at the Middle East, India is not really that much involved in that conflict. And if you look at what's happening in Ukraine, again, India is not involved. In fact, India has become somewhat of a beneficiary of these events because they are the neutral party. And so I think India's got a good chance to be the mediator between the parties and also become a leader in mediation of international rivalries. So I think India's in a very good spot.
Okay, Mark, a quick comment about U.S. interest rate policy and how Fed decisions are likely to pan out.
I believe that the Fed will have to cut interest rates probably twice before the end of this year. There's no question that if you look at the money supply decline, the percentage rate of decline of U.S. money supply has been quite dramatic, and that means that they face the possible slowing down of the American economy. Right now, the American economy looks great, but there's a good possibility of a slowdown, and that will force the Fed to reduce interest rates more dramatically than anyone expects. So I think you're going to see declines in the interest rate going forward. By the way, this does not necessarily mean that stock market will go up. A lot of people think, oh, interest rates go down, then the stock market goes up. No, there's really no strong correlation between these two things.
Okay. Mr. Mobius, another very interesting factor that has played out in the recent times is that equities worldwide have been experiencing a move towards record high, be it US, NASDAQ, or even Japanese Nikkei, or in India. At the same time, we've been seeing even precious metals commodities also surging to all-time highs. So one is getting a little confused as to where should one be really betting in more money. How would you advise an average investor now to invest their fresh cash? Should it go to equities more, or should it go to gold more?
Well, at the end of the day, you must be in equities. Equities will always beat inflation because what an investor must do is always worry about what is inflation doing to its assets, his assets. So they must be investing in equities first and foremost. Secondly, I believe everyone must have gold, physical gold, and so I'm in favor of the many Indians who believe in gold and who buy gold. By the way, I believe one of the reasons why the gold price is going up and so high is because of Indian buying. Indians are getting richer and richer, and therefore they'll have money to spend on gold. So I believe you've got to have gold and you've got to have equities, both.
Okay, and apart from this as well, apart from gold and apart from equities, like you've said, is there any other asset class also that you also advise viewers to have in their portfolios to get that diversification?
I think it's very important for people to have property, to have their own home, own their own home, and possibly another home where they can collect rent. So property is a very good long-term investment, provided you have the right location. As you know, if you talk to real estate experts, they'll say the three most important things are location, location, and location. So if you're able to find that good location, I believe buying real estate is another good way to preserve capital.
Mark, have you looked at the Indian listed real estate operators space? Because your point on real estate is very, very significant, especially in India. And you must have seen our cities continue to boom, expand outwards, even though policy and regulation sometimes has to play catch up. Do you have a view on Indian stocks in this space?
I've looked at some of these, and I think it's something you have to watch, but you have to look very, very carefully at the credit cycle and how credit is impacting these real estate companies. But at the end of the day, real estate companies could be a very interesting um, sector to look at.
Okay. What about investment prospects within the mid and small cap space in India? As we saw in the past, we had a small cap boom, and there seems to be a sense of reality that has come in. But what are your thoughts on this space?
I believe in small and medium cap simply because these companies are often overlooked. Uh, they are not heavily researched. And for someone who's willing to do the work and to do the research on these companies, it can be very rewarding because these are if you find the right stocks, they would be in the future a member of the Nifty 50. So it's very important for you to look at the small and medium, particularly the medium size stocks, because for the small cap, you've got to be careful of liquidity. But definitely, those companies that are not in the index are companies you want to look at.
One quick point, Mark, and this is to do with Indian financials, especially the large banks, public sector as well as private sector. We've seen a multi-year cleanup cycle that's taken place. Most of our recent results, as far as the banks are concerned, their quarterly results, so that most of the pain is behind us. What are your views on the Indian banking space?
Well, the Indian banks are now looking very good. I particularly like ICICI, but the other banks, some of these other banks are looking very, very interesting. And of course, that's a reflection of the economy. The Indian economy is doing so well, so you can expect that the Indian banks will do as well. So it's very important for you to look at these banks and consider investing in banks.
Okay. Mr. Mobius, would you have a view on HDFC Bank as well? We've actually seen a long drawn underperformance on this stock. This stock has been a wealth creator of the past and perhaps the core stock in everybody's portfolio, but it has been lagging. What would your view be here?
Well, if you take the long-term view of HDFC, I believe that it's a good investment, particularly if it's down. Buy it from a long-term point of view. When the stock goes down, when it tanks, then probably a good idea to go in and buy it for the long term.
Okay. And apart from the banks, which other sector are you looking at more positively? Have you looked at the outperformance in the recent past in defense, in power space, in the public sector spaces as well, sir?
That's very, very interesting. I'm particularly interested in Indian railways. I believe that's a very, very interesting growth sector for India. India needs more and more infrastructure, and particularly rail infrastructure, and that's going to be interesting. For that reason, I like Tata Steel because the country needs more and more steel, and they will be really something to look at.
Any
That's
particular
a good.
names, sir, that you can come out with from this space?
In terms of picks,
Stock ideas, yes.
yeah, I would say Tata Steel would be one. I like the telecom sector. Bharti Airtel is a very interesting stock to look at. And as I mentioned, Indian Railways services would be very, very good.
Mark, since you speak about telecom, we've also seen a very, very large fundraise at Vodafone Idea. We have Geo that's built a massive network. In the long term, do you see space for three and one public sector operator, telecom operator in India coexisting, or do you see that there are opportunities for more consolidation, which might benefit the larger couple of players?
I think three is the limit, but there definitely is room for three in India. India is a huge country. Even just one state could support a telecom company. So three is fine, and I think Vodafone Idea should do fine. They've raised, as you know, they've raised quite a lot of money, and I believe they can do well going forward. There's going to be, going forward, much more rationality in this space. And these companies are going to realize that they cannot uh, beat on price alone. They've got to provide service and quality. So those companies that are able to do that, I believe, will do very well.
Mark, one of the things that has happened in India, and you've also spoken about it in the past, is the digital backbone that we have built on these telecom networks. Over the last 2, 3 years, we saw euphoria and then reality sink in as far as some of the new age tech enabled e commerce stocks. Are you looking at that space in India, and do you see any opportunities that you would like to talk about?
I think you've got to be very, very cautious in that space because there are many new players coming in the belief that they can do very, very well because of the market excitement and because of the growth, the general growth of the industry. But I believe there are probably too many players chasing the space. And as you know, there are many companies that have gone listed without earning any money. So you've got to look at the bottom line. You've got to look at what the earnings are actually taking place with these companies. Otherwise, it's best to stay away.
Mr. Mobius, if you could list out for us one or two risks that one has to be aware of, which could derail the current momentum in the markets, not just in India but worldwide, what would those be?
I would say, first of all, what happens to the US dollar and to US interest rates. That's one thing you've got to watch very carefully. At the end of the day, if you see a dramatic increase in US interest rates, that would have a big impact. As I just mentioned, I believe that interest rates will not go up, but will go down. But if you see an increase in interest rates, then you've got to be very cautious about that. The other possibility and risk, of course, is escalation of what's happening in Ukraine. Middle East, of course, will probably sputter along, but it's really Ukraine situation. As you know, the U.S. Congress has recently approved more aid to Ukraine. That means big challenges for Russia, and the reaction for Russia is going to be a big question mark. Aligned with that, of course, is the U.S. election. Who becomes the next president of the U.S.? If Trump wins, then you've got to really look very carefully at what the new policies will be, and that will have a big impact on global markets.
Mark, take us through your own current reading as far as Sensex levels are concerned, because you had spoken about 1 lakh uh, in 5 years' time. At the current run rate, when would you say that 1 lakh would be hit?
Well, I said within 5 years, so I've hedged my bets in the sense of taking a long view. I have no question that that will hit, but I can't tell you what the short-term development will be. As I mentioned, there will be corrections along the way, but from a long-term point of view, you're going to see that one line.
Mark, you spoke about the political risk emanating from the United States of America. I just want to take it forward. If indeed it would be the return of President Trump, would it be more to do with protectionist trade policies that would upset the markets? Where does the risk actually likely emanate from? Because there is, of course, a sentimental political part, but as far as core market fundamentals are concerned, what would really change if Trump were to come back?
Yes, that's one of the things would be trade. In other words, if Trump imposes high tariffs going into the U.S. for goods going into the U.S., that could create a lot of problems, particularly for China, but for other parts of the world, including India. That would be one big issue. The other big issue would be his attitude towards Ukraine and the Middle East. If he decides that he wants to pull back and not provide aid to Ukraine, then this would be a big, big game changer, particularly for what happens in Europe. So these are I would say, two critical issues going forward.
Would you say that crude oil prices are a more immediate concern that may weigh on the markets going forward?
Well, I think oil prices will continue at these levels and maybe even go higher. But you must remember that the oil price reflects inflation and the devaluation of the US dollar. The US dollar continues to devalue, has been devaluing for the last 20 years. And this is reflected in the oil price. So it doesn't necessarily mean in real terms that oil prices are going up, but in terms of US currency, the oil price is going up.
Mr. Mobius, if you had to pick one global market which will outperform in FY25, which one would that be?
India.
That's wonderful to hear. Okay. And within India, I also wanted to ask you, what about the sunrise sectors? You did talk about railways, you've talked about banking as well. What about the sunrise sectors like solar, like renewable energy? Are you also excited about these spaces doing good over the next 5 to 10 years, sir?
Yes, it would be. I would say that the whole solar area and wind area, by the way, would be very attractive at the downstream area, because manufacturers are now producing solar at a lower and lower price, mainly because of what's happening in China. China has driven down the price of solar cells and solar units to a very, very low level. So you don't want to be competing in that space. But you want to use those solar panels to produce electricity. And those are the companies that you want to look at, companies that are usually the cheap solar cells and solar panels to produce electricity and sell that electricity to the public.
Okay, we'll take one more viewer question, and that will be the end of the viewer questions part for you. The question is coming from Bengaluru, and Adarsh Dev has sent this question for you, sir. He wants to know, how have you read through the results season so far, and which are the stocks that are looking good after the Q4 earnings?
Well, as I mentioned, I think the results have been fairly good overall. As I mentioned, I like Tata Steel, I like Bharti Airtel, I like ICICI. So I think a number of stocks that are doing very well, and I think will continue to do well. But the results so far have been quite good.
Mark, you spent a month in India. When are you planning to come next?
I'd love to come within the early part of next year, but it all depends on my schedule.
Well, we'll look forward to that visit, as along with so many other investors who've been following your career and your bets on India, and you've given several stock picks and a broader sense of how you evaluate the Indian market opportunity. Mark Mobius, as always, thank you very much for your time. Really appreciate it, and hope to see you very soon once again.
Thank you very much.
With that, it's a wrap on this exclusive Market Masters conversation with Mark Mobius. Viewers, we are going to wrap up. We'll see you soon. Until then, do keep sending in your questions, and we'll try and take them with other Market Masters as they come on Business Today television. If you've been, thank you very much for watching.